Hello, YouTube. The push-pull over our bear market downtrend continues. We spent last week over it, this week below it, and now we are coming right back down and trying to bounce off of this red line. What is this red line? It is the connect from our all-time high bear market downtrend. Every time we hit it, we backed off or rejected until the beginning of this year where we got over it, came back down and tested it once, pushed off, and then fell below. And now we want to find out whether or not it's actually going to hold. Again, if we zoom in, nice and close. We can see here that the low of the day today at roughly 388.5 is a bounce off of that downtrend. But we are now back below our 200 DMA. And this is important because it's really just going to show us mean reversion. We go up, we come back down. We go below, we come back up. If we're going to push off, we're going to have a catalyst. And there are some warning signs. Today is OPEX. And as we look here to our weekly chart, which is going to close out today, we got a rejection here off our 50 weekly. So why is this significant, Justin? Tell me why. Why? Well, because our high of the week is 396.47, off by about 30 cents to hit our 50 weekly. That is a rejection. And we're also below our 200 DMA. So we're below the long-term price on the daily chart, and we are below the short-term price on the weekly chart, which is not a good look at all. If we look to a few more indicators to see exactly what's happening, there is QQQ. This one's so interesting because we got the W completed now. W is in, elevated bull volume. We got a back test of 303.37 today. That goes back here to our September gap. And the other reason why this is so interesting is because it actually bounced off of 304 and reclaimed it as we are recording this video. Why does 304 matter? Well, I mentioned yesterday on the video that this is the first time. Ooh, what did I just delete? QQQ. This is the first time on the QQQ chart that I can see a triple engulfing pattern where we have back-to-back 3 times engulfing candles. And by remaining above 304, that is the threshold. That means we have a bullish engulfing weekly candle this week above the previous weekly candle high, which is pretty strong. And we're now back above our 50. I think we're going to hold it. It would take a big slam of about 10 points for us to get there. So this is so interesting because the NASDAQ is still the the breakout winner. If we look at a few more quick charts just for comparison, we're going to have a look here at the dollar. The dollar is now crash landing back on its 50 DMA. Remembering, when the dollar goes down, stocks go up. So the dollar's down. Why are stocks down? SOS, right? Exactly. VIX is up, elevated 8% today. 2-year note is back below 4%, and the 10-year note is back below 3.5%. Here is what's particularly interesting, though. Oil down dramatically. This is CL, or the light sweet crude futures, and it's all the way down here at 66. We look on our weekly chart. Why is this significant? Well, it's because let's zoom into a little bit closer of a time period here. It's because we're right here on our 200 weekly moving average. And remember, the Biden administration said they were going to reload the SPR, or Strategic Petroleum Reserve, at about $70. Well, the biggest country, the richest country in the world wants to buy, and we're below that price. Why? Because there are demand shocks, or where the economy is going to come to a screeching halt and people won't need energy anymore. So this is really interesting. We look to gold next, and we note here that gold, I'm looking at the gold futures, is actually back above its 2011 all-time high. It looks like it's trying to do a W. It's getting a big push off of its 50 weekly. And by being above 1923.7, we are above what used to be resistance. So why would people be buying the dollar? It's up 5% on the week. Well, because they want something that is safe. They perceive to be safe. So the fact that VIX is up, yields are down, dollars down, stocks are down, and gold is up with Bitcoin up, something's funky here. People are voting and they are worried. That's what this tells me. Looking here to BTC, it's up 18, 19% on the week. It's powering up over 25K. It's over its 50 and 200 weekly moving average. It's also even invalidating my psychology chart, which meant we were supposed to reject here at about 25K. Here's the really interesting part, though. If we look a little bit more objectively at the bullish pattern that I had laid out, we note that we have 1, 2, 3 pumps in red volume. We have a breach of our green uptrend, and then we just don't look back. Boom, right? That's the big rally here. So what do we have forming here on our most recent one? 1, 2, 3 ramps of volume, just like we did here. 3 ramps of volume, and then just kind of fizzles out. Well, yeah, it fizzles out, but we went dramatically higher from about 7K up here to about 60K. That's a big, big, big push. So I'm surprised by this move. I don't know if Bitcoin is actually safe, but people perceive it to be safe. If there's going to be a run on the banks, well, the whole reason why cryptocurrency was created is because the central bankers don't act for you, they act for them. So the fact that Bitcoin's up with gold, both at the high of the week, tells me a lot. As we look here to a few more charts just to wrap it up, RFC, First Republic Bank, they got a bailout yesterday, 30 billion. Chart is in the dumps. It's down 68% this week alone. Does not even include last week's decline. It's down 25% on the day. So there's contagion, 100% feeding through to the rest of the economy. We look here to IAT, which is the regional bank ETF. It's down by 17% on the week, and it is lower than where it opened up the week. And also look at IAK, which is the insurance ETF I mentioned earlier in the week. And this has some weird flashed warnings, similar and reminiscent of the last time we had a big, great collapse, right? Figure out what time that was. I'm going to ask you, please, and thank you to smash a thumbs up and consider subscribing to the channel if you are enjoying the content. Thank you and happy Friday. All right, let's look at two more quick things, then we're going to wrap it up. We look here to the heat map week to date, which basically just tells us what is doing well, what's not doing well. You can clearly see financials are down, energy down, right? A lot of things are down. We look here to non-grouped. It's obvious what the theme is here. It's the $1 trillion company, NVIDIA, Meta, Apple, Google, Amazon, Tesla, Meta, all doing well. Everything else very mixed, but not doing particularly hot. All these small blocks over here, man, they're again pretty red. So that's your theme. It's tech against the world. Is 304 on QQQ going to hold? And then finally, nice little headline here for you to go into the weekend. This could be a bullish reaction. So there's been a lot of turmoil, a lot of fear. We can see that evidence in all these different ETFs. Here's something that maybe, again, has potential to make us go up. What? Global peace. Xi to meet Russia for the first time since you know what happened. And to journey a friendship where they're going to push the peace blueprint. Oh my goodness. There's no date officially confirmed for this yet, but make sure to drop me a comment and tell me what you think. Otherwise, come for our Friday stream, which is going to be for the final hour. If not, watch the weekend deep dive now queued up here on the left-hand side. Thank you so much for tuning in. I look forward to seeing you on the next one.